A perfect storm of supply shortages, better than expected demand, and a pandemic that just won't quit have led to soaring prices of many commodities. The price of iron ore, copper, and even oil have all seen increases that have pushed up inflation indices around the world.
The biggest risk right now is that higher inflation would derail the economic recovery we are seeing post-pandemic, and eventually the worst-case scenario would be what we call stagflation. In other words, low growth as well as high inflation. And in that kind of scenario, for investors to make up for the excessive inflation that they are facing, they are pressured into taking more and more risk, more and more speculation, and that's when we will see a bit of asset bubbles forming. The need to diversify has never been greater.
So far, most central banks have taken the position that the inflation risks are temporary and will subside once demand and supply chains normalize. But some analysts are not convinced. They're asking if this is a new commodities supercycle, that is, a prolonged period of high prices.
I feel that this is a paradigm shift. The demand for commodities wouldn't be the same for all commodities this time. Coal obviously is really losing. Fossil fuels may or may not, because it's difficult to say. In the West, I would say fossil fuels may be the loser, but in developing countries, coal may still be needed. Then we have the metals. The base metals like iron ore may not be so much in demand as compared to copper and maybe lithium and nickel.
China's central government is so concerned, it has warned the metal industry of zero tolerance for speculation and promised to crack down on such activity.
China, especially this year, they have been very concerned about the financial risk. So they've been putting a lot of, pressure on commodities, speculative, and even cryptocurrency, which they came out and said they don't, approve crypto as a payment. So I think China, being the largest consumer of commodities, they will have a significant impact on prices as well. They do pose a potential threat if they think speculating investments are kind of happening in the commodity sector.
The price of gold is also trending upwards after hitting an all-time high last year.
If you look at gold price, it's definitely looking more technical bullish, given in May, it registered about 8% return, and that's the strongest we saw since July last year. We have seen flows back into the gold market. If you look at the futures and also the ETFs, a lot of big institutional are putting back money into gold because they see risk into rising inflation and also the US dollar weakness.
Another area of concern for many is the rising price of food products, which has affected inflation in many countries.
Food prices, one of the largest components of every gauge of inflation across the world. So of course, with rising raw inputs of food prices right now, there's some cause for concern. We are seeing prices go to record high, and that puts a strain on government budgets to keep covering it in the form of government price controls.
Analysts say the rise in food prices is only partly due to disruptions due to the COVID-19 pandemic.
There are many other factors involved. Of course, COVID sort of aggravated the whole situation. For example, you have meat processing plants that are practically empty nowadays in many parts of the world because that's one of the clusters that actually spread the coronavirus. Then we have the weather. We have been erratic weather, and especially crops that is grown perennially affected. We have drought in Brazil that has sent coffee prices very high. In the US, soybean, corn prices especially also have been at almost decade highs.
Analysts say that the cost of shipping has also gone up as a result of supply chain disruptions and the rise in oil prices, which have had a domino effect on food prices.
That just brings it back to, do I really want to pay this much to ship this product if consumers won't pay for it. So shipping cost and input cost as well. You can see crude oil prices now getting back to the normal prices pre-COVID levels, and all this are just following the crude oil prices, and we're seeing transport costs increasing, input costs increasing, and so generally, yeah, that's one of another reason why we're seeing food prices increasing overall.
But there is some good news for consumers. Experts say that rising commodity prices do not necessarily mean big price increases for consumer products.
But when we talk about significant increase in commodity prices, we have to bear in mind that you don't really see the same proportion of increase on the shelf, like in terms of what consumer pay. It might trickle down eventually, but it's not like I've said, for example, there's been a 137% increase in the veg oils category for the sunflower seed in Russia. It doesn't mean that people will be getting 137% more for oil, right? And the reason we have this is that as much as possible, the whole supply chain tries to bear the cost.